For those that are on, we are recording this today to send out to our clients and prospects globally. So if I could just ask you to stay muted. If you do have any questions, please type them in. And if we get a chance at the end, we will answer them. If we don't, we'll have your details, and we'll be able to get back to you with any answers that you require. Okay, so I'm now going to start. Welcome, thanks for coming on today. My name's Graham Bentley, I head up deVere Property. Today, we're talking about UK holiday lets. As far as COVID, there's not many positives that COVID has brought, but one significant positive it has brought is for property investment in the UK. Most people have looked to your normal buy-to-let residential properties, and again, they've made a lot of money. But those more astute investors have looked at the absolutely booming holiday let market. Those of you that are in the UK or know people in the UK probably know how hard it was last year and how hard it is getting to book next year as far as a holiday let. Myself, as a family, tried booking something and couldn't get anywhere. And this is really where a lot of investors have capitalized. There's very little supply and a huge demand, not just for people wanting to go on holiday, but for those wanting to get into the investment side, the very high returns of holiday let investments. So today we have Rhys Boyle, one of the managing partners for Global Residential. We have Jonathan Lewis, who's a COO for Global Residential. And we have a special guest, which I'm really happy to have on board today, which is Carol Walsgrove. So Carol is business development for Sykes Holiday Cottages. Sykes are the largest agent of holiday lets in the UK. And a lot of questions we're being asked from our investors at present is obviously they understand there's a huge boom, and is that here to stay? And this is where Carol can go into depth about where the holiday let market was pre-COVID, where it is now, and where it's looking in the future, so our investors can basically make an informed decision whether they think it's still a great market to get into. We have our own opinion at deVere, and so do Global Residential, but it's great to have somebody like Carol who's impartial coming on board and speaking with us today. So welcome, Carol. Can I hand over to you, please?
So, sorry, just before I pass over to Carol, I think it's important just to really state the obvious on why us, Global Residential, we were really eager to enter into this sector. I think on face value, for anyone who's been reading the tabloids and seen all of the news and media about how booming the UK staycation has been. But I really wanted to just include a couple of snapshots from articles from the Times, the Mirror, really highlighting not necessarily about this year and how booming the holiday let sector has been, but more importantly for 2022. And again, I thought it was quite poignant before I do pass over to Carol, just to explain that we have been looking at this sector for about 6 months, which Jonathan Lewis can go into a bit more detail on the later slides. But really, for those who haven't seen the articles that suggest how buoyant the UK staycation market is right now. So I did want to start off on that, and Carol, I'll introduce you and just to hopefully give us an update on Sykes and the great things that you guys are up to at the minute.
Great, thank you, Rhys. Thanks, Graham. So as Graham mentioned, Sykes are one of the UK leading holiday rental agencies here in the UK. We've been established for over 30 years, so bring with us a wealth of experience. Our motto is putting your second home first. We're private equity backed by a company called Vitruvian, and they're behind Skyscanner and the listing of Just Eat, which are very famous household names here in the UK. Just with regards to where we are currently on a number perspective, we've got 21,000 properties, and that's across the UK, Ireland and New Zealand. And we've been awarded the best large UK holiday booking company for the past 8 years consecutively. So just taking a pause here on this slide, essentially what this is trying to demonstrate is how big the holiday rental market is and the different categories that we have within this sector. So you've got your typical second home markets, such as your rural holiday cottages, but then you've also got your static caravans, your camping and your glamping. Now, with regards to our analysis that we're looking at the moment, we've actually seen a growth of this business and this platform between 5 and 15% per annum across the segments of the UK. And the UK second holiday home market has actually got an increase as well of 5%. So definitely on the upward trend. So just with regards to the market itself, it is very hot at the moment. I appreciate if we have a lot of overseas investors here at the moment, you may not be aware of some of these names that are on this board, but essentially what this is trying to demonstrate is the big M&A activity and the investment from the private equity houses here in the UK market. And that continues to strive with regards to consolidation and pushing things forward due to the staycation index at the moment. Just with regards to this slide on the customers, you can see here that actually over the course of the past 3 years, we've increased the number of repeat business, but owing to that as well, we've actually taken 1.6 million customers on holiday back in 2020. And this year, we've actually taken 2.3 million customers. So that growth trajectory is huge. And that's something we're still seeing continue to grow onwards and upwards. Just to give you an idea of how that translates into a number of bookings, last year, we actually took 410,000, this year 615,000, and next year we're looking at 686,000. So that number is going up and up year on year.
I think, again, just to add on that, it just really does amplify the sheer size of who Sykes are. And just looking at this simply from a graph perspective, it looks like returning customers is obviously on the increase and new customers is on the decrease. That's simply not the case. Again, kind of a 2% uplift versus new customers just shows the level of service on what Sykes are able to offer landlords and clients.
Definitely.
Sorry, Carol.
No, thank you, Reese. So we also went out to a number of our consumers and just wanted to get an idea of what they were looking for when they were looking to book a holiday in the UK. As you can see here, price, location, quality, and reviews were kind of like amongst the top. We'll go into a little bit more detail about the types of features as well that properties that can have that actually increase bookings and increase revenue. But this is just really a snapshot of what we found recently. Again, one of the things that Sykes is famous for is our staycation index. So we did one this year, just with regards to understand what COVID implications had and what that looked like. As you can see here, 33% of Brits said they'll spend more time on holidays following the pandemic, which is huge. Glamping style accommodation, which goes back to the earlier slide, that's actually grown immensely by 423%. Poorcations, as we say, we take more pets on holiday than we do children, and 1 in 3 of our holidays actually takes a pet. And again, just with regards to things that are influencing staycation accommodation is outside space, proximity to the beach, and Wi-Fi and technology. And again, just due to the pandemic as well, workcations are on the rise, and people are looking for more green credentials as well when they're looking at places to stay.
Great. Well, I think, look, we can come back to questions and answers for Carol at the end. Really about the topic is the UK staycation market here to stay. But in order to actually get our first holiday let investment opportunity for clients to the table, we've worked very closely with Carol and Sykes, again, to do the appraisals and to make sure that we had every box ticked when we were going to package something for our client. So the 3 biggest points for me, taking off Sykes research, was 60%, or it's estimated that 60% of Brits will remain in the UK for the main summer break of next year. Booking figures have increased 40% from 2019 up to 2021. But more important, looking at this as an investment product for our clients, given that the average income is up 56%, on average £9,500 from July and August, it really was a sector that we wanted to get familiar with. And again, as working with Sykes and Carol, we really think it's a great opportunity for clients to really have that uncapped nature of passive income. Another key stat that I simply looked at working with JL was a simple Google search for the word UK staycation. Looking back to 2016, again, very minimal, but coming into the lockdown and off the back of the pandemic, that's hugely spiked. So obviously we're expecting a big boom, but again, I think looking at the data and what this market's going to look like in the next 3, 4, 5 years' time, I think will be will really be good to kind of ask Carol her thoughts and views at the end of this.
Just on that, Reece, sorry, I was just going to mention with regards to when the lockdown was lifted, the 4th of July bookings were actually up by 558%, which is amazing, which is actually going against your curve there.
That's huge.
Very good. Yeah, massive, massive.
I think on this point, so we've identified an area in the Southwest, which I'm going to pass over to Jonathan Lewis, just because he's boots on the ground in the UK, can really give a sense of why we've identified this area and actually when lockdown happened, what people were looking for. But again, in terms of Devon and Cornwall, they're amongst the 2 most popular locations for UK staycations and the holiday let sector. So JL, I thought I'd just pass over to you to give a bit of an idea for people who don't necessarily know this area in Sidmuth.
Thanks, Reece. Thanks, Carol. Hi, everybody. Jonathan Lewis, CEO, Global Residential. We actually started looking at this sector probably nearer to 2 years ago now to try and offer clients an alternative residential asset-backed investment. And the key for me was to actually work back from where are the most desirable areas where people want to come and actually holiday. I hooked up with Sykes and have worked very closely with them, and they formed an alliance with Global Residential. And the key really is clearly everybody wants very good quality accommodation when they go on vacation. However, the location, it's location. It's very, very important that whichever town or village you're in and wherever you are in certain parts of the UK, that's where people want to visit. Just a little bit of background. So Devon, a rural county, southwest of England. Sidmuth is a small town, circa 12,500 population. It's on the Jurassic coastline, and it's an AONB area, which is Area of Outstanding Natural Beauty. Times newspaper recently placed it in the top, one of the top coastal areas to live in the United Kingdom, and it's got rural connections, beaches, nature reserves, hotels, etc., etc. So a really desirable location. Circa 3 hours drive from Birmingham, 3.5 hours drive from London. Interestingly, Exeter Airport is only 11 miles from Sidmuth, about 20 minutes. And Exeter Airport services 28 destinations in total, 8 of those destinations from airports in the United Kingdom. You're approximately 15 minutes drive off the M5, which is one of the main motorways in England, which services the West Midlands, down through into the southwest of England, into Devon and Cornwall. I was there a few weeks ago on a very sort of windy and cold November day, and it's very busy all year round. It's got a real working community, Sidmuth has, and a lot to offer. I've got 2 kids, a wife and a dog, and you know, it has the golf club, cricket, tennis and croquet centre. It's got a rugby football club in the centre of the town. It's one of the few towns as well to have a cinema and a live theatre. They do live shows, so even if the weather's bad as it can be in the UK or in England, then you've got cinema, lots of obviously outdoor fishing, surfing. There must have been 20 or 30 surfers on the water that day. And it's got real strong retail. So you've got lots of boutique local shops, but you've also got some big chains, Boots, Tesco's, Costa Coffee. Large hotel in the centre, which obviously, hospital in the centre, beg your pardon. And it's interesting, you've got 3 4-star hotels right in the centre of Sidmuth, and they've all got an average score of 4.5 out of 5 on Google reviews. So I think ultimately Sidmuth is a very desirable place for vacation, sort of upper middle class. So, you know, everybody's welcome, everybody can afford it. So a real nice place to go.
Well, so what, for anyone who doesn't know, I've got a quick video on Sidmuth, just to give you an idea, again, kind of carrying on from what JL just mentioned there. So I'll play a quick video. So again, just to really kind of dig into the detail of this project, because even though Sidmuth, like JL mentioned, great location, the investment opportunity has got to stack up for our clients. So this particular project is based in Stoneleigh Village. We've got 15 holiday homes available, which are all 3-bedroom holiday homes. They will start from £285,000. Now, one point that, again, from speaking with Carol and the research that Jonathan and our team have put into looking at the holiday let sector, is that two of the most poignant searches off the back of lockdown were having a site that was pet friendly and actually having hot tubs. So this holiday park will include that. Now, based on our appraisal and looking at where the market's at the minute, we're expecting uncapped earnings of anywhere between 7 to 9%. Parking is also available for any tenant or any guest that will be coming on to rent the apartment out. Now, this is an off-plan project, so a full new build holiday home, and there will be a 35% down payment and then balance on completion, which will be Q2 of 2023. Now, again, through actually packaging this product for our investors, we've managed to secure an interest-free 5-year payment plan, which, again, I'm not sure if there's anything that you want to add on to that, Jonathan, but I think that's quite important because really we're looking at this as a cash investment simply because of the high income that it would generate. Are there any points that you want to add on to that, Jonathan?
Yeah, Reece, it's we managed to negotiate with the developer a 50% 5-year interest-free finance option available for people who wish to take that. Just a little bit of background on the developer. Landmark Group was founded in 1988, originally started as asset managers and then moved into development. They're based in Leicestershire in the West Midlands, offices in Hinckley. They're a private development company, and today they've delivered 350 units, currently have around 450 units in various phases of construction. There is a pipeline, there is a 3 to 5 year pipeline of 3,000 units, residential units, not all holiday lets. They're well funded by 3 or 4 of the largest challenger banks in the UK, circa 50 staff, and they've primarily done a mixture of apartments and houses and bungalows in the residential sector. But what's very interesting is they do focus on the holiday let market. They've got several holiday let sites in the UK and primarily in the southwest.
I think just following on to that, it might be worthwhile for you to talk through the actual site plan, Jonathan, because even though we're looking at new build holiday cottages, this is on an existing site. So the plots in orange are already existing holiday lets, and the plots in blue are what we actually have access to. So if you can give us a bit of an understanding as to the location aspects and a bit more on the site itself, Jonathan.
Yes, the site sits about 300 meters off the ocean. There are a total currently of 61 existing units, which are largely holiday lets. There are some sort of owner occupiers there, people that have had sort of second homes, family homes, etc. So the units that are highlighted in blue are 15 new build units. The total area is about 10 acres, as I say, and then there will be single-story bungalows. So we're talking bricks and mortar, wrap foundations, pitched roofs. So these are not, caravans on stilts. These are proper residential dwellings, bricks and mortar. They will be, they're on about a 12 to 15 month construction phase, which is due to start in Q1 next year, and then the plan is to be complete by January, February 2023, ready for the 23 summer season. As you can see, there will be a bar, a gymnasium, and a pool and a small office in the entrance as you go in. We've got a good relationship with this particular developer. We recently launched a project of theirs in Bude, which sold out in 7 days, largely to UK buyers. But the Sidmuth is the first scheme that we want to present to offshore, to international investors. So just moving on, as you can see, some images there of the bungalows. All the bungalows come fully fitted, furniture, all FF&E packages, laundry, knives and forks, kettles, toasters, everything. So these are they're full purpose holiday dwellings, and they're also being designed, and the fit out of these is obviously conducive to holiday lets. Example, you won't see much carpet in them because spillages and carpet, etc. You'll see sort of the leatherette settees, which, if kids are there and roaming around and they spill some orange juice or whatever. So it's very much maintenance designed for the interior fit outs.
I think it's quite important as well, coming back to the undersupply, from speaking with Carol and looking at Sidmuth in particular. I think if we're looking at this year alone, and Carol, please feel free to comment, but if we had this launched and ready to rent out, just the actual demand, because I think you were talking like 2 or 3 times over, you could have rented out your current stock list, hence why you're so eager for us to be going through Sykes and vice versa because of your management. But could you just give us a bit of an update on Sidmuth from what you've experienced this year?
Yeah, definitely, Reece. So just on that note, we were seeing net occupancy in 97, 98%, and actually we could have sold it out 2 or 3 times over. It was just the fact we didn't have enough stock, but we had pent up demand. So we need more stock in that area. So it's a key location for us as part of our growth strategy moving forward.
Perfect. So,
sorry, Reece, if I can interject there, we work very closely. So Carol has done, and her team, many appraisals for us on projects and properties that we've looked at, holiday let projects in various locations. And as soon as I get an outline of something that I think might have some legs, then it's straight over to Carol. We get into dialogue to say, look, Carol, what do you think? What's the location? How many properties have you got in that area? What's the demand? What are people asking for? Does everybody want big houses, or do they all want 2-bedroom apartments in that location? So it's very much a feasibility. We work very closely with Sykes on this because that intel is crucial. We have to work back from that because that's how everybody secures the occupancy. Then we secure the rates, and then we secure the return for the investors.
I think that then leads on pretty well onto just a working example. Now, we have got 15 3-bedroom holiday lets available. So we've worked this on a base average of a strike price at £326,000. Prices do start from 285, but based on the appraisal working with Carol, we're looking at, based on a year's forecast of an occupancy of 37 weeks. And that would accumulate around about a 71% occupancy rate. Now, if we were looking at the average weekly rent, we would assume we'd look at £1,280, and that's based on the 37 weeks. If we were doing it on 100% occupancy, it would work out about £911. So gross income, we can expect per annum for £47,392. Now, this is where I wanted to, again, open it up and explain the benefits of working with Sykes. If we were looking at their sales and lettings and management fee, the net deduction for their costs would be circa £15,166. Now, because we are renting this out to new guests on a daily, weekly, monthly basis, we can expect a changeover, cleaning and welcome pack cost of around about £6,225 that would eat into that gross rent. And then we've gone ultra conservative, looking at all of the utilities, non-domestic rates, insurance, service charge, and ground rent. And we'd factor that in to basically offset around about £2,500 or £2,450. So on this model, we would assume to look at a net income for a client of £23,551, which would actually net out a net yield as a percentage at 7.2%. So I think just looking at this structure, it would probably be good to pass over to Carol just to explain about how you go to market and really the value that Sykes offer compared to maybe looking to try and do it yourself, or again, probably another question, looking at an Airbnb type scenario.
Yeah, definitely, Reece, thank you. So just with regards to Sykes, a big thing here for any investors that are looking to flip from long-term lets into holiday lets is about the change in pricing. And that's what you're buying into working with a company like ourselves. So back in 2017, we invested in a revenue management software system called Prism, and that's evolved over a period of time. Essentially, why that's so important is because our pricing is based on a supply and demand model. So all those price points over the 52 weeks of the year will change in line with demand. So what we were seeing this summer, actually from a base price, which is a starting point, we were seeing an increase and an uplift of 50% of that price. So if we were selling a week at £1,000, for example, it'd actually be going to 1,500 because we know the demand's there. And essentially, our biggest aim is making as much money for our investors as we possibly can. Sitting behind that, however, is obviously the marketing support. So last year we spent £26 million on advertising, and that's both above the line and below the line campaigns. And we've got an active CRM campaign as well that goes out to 2.9 million customers. And then going back to the earlier side, because we do what we say we're going to do and we give a good service, that's why we get repeat business as well. And that's what adds, and that's what brings people back time and time again. And happy guests equal happy reviews and more bookings.
Fantastic.
I think just to interject there, Reece, this is a different model to normal AST. You have in the slide in front of us, you obviously have, as you talked through, you have the gross income, and then this is like a business, so there's operating costs to that. And the sales and lettings is the key. That's where it starts. If Carol doesn't get the bookings, then everything else falls down. And then obviously the management fees, you have to manage. It's different managing a property that's going to have a regular turnover of tenants, albeit there for them 3 days or 5 days or 2 weeks. So that takes a lot of management. Unlike a normal AST where you put a tenant in for 1 year and that's it. The changeover, the cleaning, again, that's crucial. Imagine turning up for a holiday with your family and the bed sheets, are not made, or the kitchen's dirty, etc. So that's a very important part in that welcome pack. And then one thing that we at GR have done here, which I've not seen done before, is they would normally work out a net yield based on all those costs. But we've gone that extra line because there's costs from the operationals, but then there's costs for the landlord. So the landlord, the owner of the property, there are utilities, there's non-domestic rates, there's obviously the service charge, the insurance, etc., etc. So we've accounted for those and forecasted those very closely with the developer, and to get a genuine net income. So that's a real number. We all know on standard ASTs, when you take everything out, you're lucky in Birmingham and Manchester to get 3.5–4%. So this is not far off double a yield what you would get on a normal AST, but it takes more effort from our side, from Sykes, from Global Residential, to make sure that everything goes to plan and the investor gets the return.
Yeah. So I think, just to really summarize before we look to try and take some questions and answers, these were our 3 points. I think importantly that pets is a #1 search for feature, which earned more than 54% than other properties in the same region. So having Sidmuth as a pet-friendly holiday home would certainly help increase your ROI. Again, looking at Wi-Fi earns an extra 16%, and accepting pets earns an 11% more. As Sykes mentioned, Sykes took more pets on holiday than children, actually 1 in 3. Coastal 7%, open fires 14%. So we are literally looking to try and tick the boxes for everything would increase the income for our investors. And then finally, looking at the southwest of England as a whole, it brought over £1.3 billion from 2019 until 2021. So a real good location economically to really focus on an investment proposition. So that's more or less it from Global Residential. Graham, I don't know if you have anything that you want to wrap up with your side, or if there are any questions that, whilst we do have Carol on the line, to maybe cover off.
Yeah, thanks, Reece. Thanks, guys. I thought that was really informative. Just from my side, when it comes to investments, I try and keep things really, really simple. We have a situation in the UK where a lot of people have had to go on holiday in the UK. They've been forced to do that because they haven't been able to travel abroad. And generally, humans, we're creatures of comfort. We stick to what we know. So I think there's going to be a lot of return business, as we saw on your stat earlier, Carol, as it was. But the new clients coming on board is nearly 50% more in the last year or two. We're going to have those repeat clients as well. On top of that, there's a lot of people that won't be vaccinated. There's millions in the UK. So they're now stuck in the UK, and we don't know how long for. Thirdly, I would say that being in the UK, I was in Abu Dhabi for 12 years. I moved back here a year ago, or just over a year ago. More or less everybody now has a dog. Those stats have gone through the roof. Myself, I've got 3 kids and 3 small dogs, and I tried getting a holiday let last year in Devon or Cornwall, and I couldn't get anywhere. And as far as it being pet friendly, there's a lot of people that, with the cost, which also gone through the roof, of putting your dogs in kennels, and a lot of those people that don't like putting their dogs in kennels, they don't have any options, and you're really, really limited on pet friendly accommodation in the UK. As Carol said, she could have sold this region over 2 or 3 times. And on top of that, you've got all the people with pets. And then finally, I think one stat that I'm not sure came up here, but I'm pretty sure that I saw recently was, and again, something I was looking at, was if you had a hot tub, I think it's 67% more likely to rent. So a lot of people are looking for that pet friendly, near a coast. Everyone loves a log fire. I see you've got that stat in there. But also, as far as having a hot tub, that's what my kids wanted, in fairness, myself as well. So that's really me just looking simply as this as an investment. As far as in my view, holiday lets are still going to boom, not only in capital appreciation because the sheer lack of supply, but also I think those yields, I mean, we based our yields on properties without hot tubs. So I can see an uplift on that as well. Has any questions come in, or does anybody want to add anything onto that? I know there's no questions yet, so we may have answered everything. Have you got your details on here, Reese, or not, or should we share them with the recording?
I don't. I will ping them across to each of the consultant and clients that might have more questions.
Yeah, if any clients, any consultants want to look into the availability, the aspects, have a look into cash flows in more detail, any more information whatsoever, please contact your consultant. And Reese covers the Middle East and Asia, and Jake, also a managing partner for Global Residential, manages Europe and Africa. So please, any more information, it's definitely an opportunity that a lot of people haven't got access to, which is why we're so lucky to have this. We're looking for quite a while to find the right location, the right properties with all these features, and we have that, and I truly believe it's a fantastic investment for clients. Okay, thanks everybody.
Thank you, Carol, for joining. Thanks, Jonathan.
Thank you, Carol. Thanks, Jael.
Thank you. Thank you, everyone.
Thanks all. Bye-bye.